Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 5th, 2025, and we're diving into Carlisle's fourth quarter 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Carlisle has had an interesting quarter, and I'm excited to break down the numbers and strategic moves with you.
Revenue and profitability overview. Let's start with the top line. Carlisle reported a fourth quarter revenue of $1.1 billion, which is a slight decline of 0.4% year over year. However, the company posted a record adjusted EPS of $4.47, up 7% from last year. John, what are your thoughts on these results?
Despite the revenue dip, Carlisle's profitability metrics are impressive. The operating margin stands at 19.9%, and the adjusted EBITDA margin is at 25.1%. This indicates strong cost management and operational efficiency, which have helped offset the revenue challenges.
Strategic initiatives and acquisitions. Carlisle has been active on the strategic front, completing the acquisition of Plastifab and repurchasing $420 million worth of shares in Q4. How do these moves align with their Vision 2030 strategy?
The acquisition of Plastifab strengthens Carlisle's building envelope capabilities, which is crucial for their Vision 2030 strategy. The share repurchase reflects their commitment to returning capital to shareholders. Looking ahead, they expect mid-single-digit revenue growth in 2025, which aligns with their strategic goals.
Segment performance and CWT. Let's delve into the segment performance. Carlisle Construction Materials CCM reported a 2% increase in revenue, while Carlisle Weatherproofing Technologies saw a 7% decline. What drove these results?
CCM's growth was driven by acquisitions and healthy re-roofing activity, though it faced challenges in commercial construction. CWT, on the other hand, was impacted by weaker residential markets and lower roof coating sales due to dry weather. The adjusted EBITDA margins reflect these dynamics, with CCM at 29.4% and CWT at 18.3%.
CEO's perspective and future outlook. Koch, Carlisle's CEO, mentioned their Vision 2030 target of $40 adjusted EPS. How does the company plan to achieve this, especially with the market challenges expected to continue into 2025?
Koch emphasized the importance of strategic acquisitions and operational efficiencies. The company is focusing on re-roofing demand and new product introductions. They anticipate a 50 basis point expansion in adjusted EBITDA margin for 2025, which should support their long-term EPS target despite ongoing market headwinds.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $4.48 for the quarter, but Carlisle reported an adjusted EPS of $4.47. How should investors interpret this slight miss?
While the adjusted EPS came in just below expectations, the 7% year-over-year growth is commendable given the challenging environment. The slight miss is not a major concern, as the company has demonstrated strong operational performance and strategic execution.
Key takeaways. In summary, Carlisle has delivered a strong performance with a record adjusted EPS of $4.47, significant share repurchases, and a positive outlook for 2025. John, any final thoughts on Carlisle's investment prospects?
Carlisle's strategic initiatives and focus on operational efficiency position it well for future growth. The company's commitment to shareholder returns and its Vision 2030 strategy make it an attractive investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Carlisle's performance in the comments below.